So in today's video, I'm going to be talking about an order block. I know most of us, we used to hear about order block, but we don't even know how to trade it or we don't know what it's about. So let's dive straight into this video. So there are actually a lot of order blocks out there, but if you don't understand the basic of order block, you'll not be able to trade the advanced concept of order block. First of all, what is an order block? An order block is a specific price zone on the chart indicating where institutional traders like the banks, the hedge fund have placed large split up order to maximize market impact. This area acts as a significant supply or demand level, often signaling trend reversal, and are identified by finding an engulfing candlestick pattern that follows an impulsive high volume move. If you check Google, this is what it's going to give you. But I know trading is not about stories. Yes, it's only we just have to be practical about it. What are they really trying to say? They are trying to say that it's actually like a zone, a demand zone or a supply zone where they actually bounce back. But who are bouncing the prices off this place, off this place, off this place? They are the banks or the hedge fund. So let's do some graphical example on how the bullish actually looks like and how the bearish look like. All right, so this is actually a bullish example, and this is actually a bearish example of an order block. So we have major two types of order block. We have the bullish order block and we have the bearish order block. But we have more than that. We have the mitigation block, we have the breaker block, and so on. But the basic concept of an order block is actually the bullish order block and the bearish order block. And if you want to trade a bullish order block, you have to look for the last down close candle, the last red candle before the aggressive push up. If you look at this pattern, they were actually selling aggressively. Then all of a sudden, this right here is actually the last red candle, this last sell before the momentum. So if you are looking to take a trade, you are going to wait for them to actually expand, break above the previous high being created, and come back into the last bearish candle. So a bullish order block is actually a last bearish candle before the reversal. That's just the basic explanation for it. A bullish order block is actually a bearish candle, the last bearish candle before the market reversal. So if we look closely into this place, where is our last bearish candle? It is actually this place. So this is where you'll be looking to take your trade. Take it here. Then the reverse is the case for a bearish order block. Well, I'm going to let you to guess. What do you think I'm going to be looking for if reverse is the case and is actually in a bearish scenario? Which type of candle am I looking for? Let me give you two seconds to think about it. Actually, if you say that we are looking for a bullish candle, then yes, or a green candle, exactly. So in a bearish scenario, we are looking for the last green candle that was closed or the last bullish candle before the market reversal. In a situation like this is actually, or we can say this, we can say this is our last candle before the market reversal. And we can say this because this is like the last before the market reversal. So it does not matter where, it can be here, it can be here. And in the case of this, we have this, or let's say we have this as the last bearish, as the last bullish candle before the market reversal, at this point. Okay, so if you have a price point coming like this, and let's say you have a proper break of structure at this low, and you're not looking for it to take a trade at the retracement leg, when the market is retracing, just look for the last bullish candle before the market reversal. Well, this is not enough. Let's go into the chart and let me explain how this works in the chart. But before that, there are some certain things we need to check, or we need to master, or we need to follow before we can say yes, we are actually on the right path. So first things first, what do you want to see? First of all, you want to see a continuation of structure. That's BOS. You have this low, we have this high. Okay, continuation of structure. Like, okay, in a situation like this is actually a BOS, a break of structure. This is a break of structure to the upside, you can actually see a break of structure to the upside. You can actually see that it's actually a break of structure. And again, you want to see a break of structure. Then after the break of structure, the reversal, this is where you want to take your trade. And I know most of you don't understand the difference between a break of structure and a market structure shift. I'm going to just use like a minute to just explain what a break of structure is. Let's imagine you are following a flow like this. You are following a flow like this. All of these that you are looking at, these are break of structures. They are breaking previous structures. But a market structure shift now occurs when the highs that have been protected now turn to the sell. Like let's say something like this. Okay. Now at this price point, here, we're protecting this, we're not getting there. At this price point, this is a market structure shift, MSS. So this is what I will actually teach for free. And we have this one is BOS. So a continuation of structure is BOS like this. But once the trend changes MSS, then what follows will now be a BOS. So don't misuse the terms when it comes to trading. But all that aside, let's go into the real chart and let's see what or how it works in the real chart. But before then, if you're interested in joining our Signal group, you can check our Telegram channel. I'm going to leave it in the description, so you can join our Telegram channel. And for our Signal group is $30 for people outside Nigeria, but if you're in Nigeria, it's 30,000 naira. And for the full mentorship, which is going to last for 3 months, is $150 or 150k, which is in Nigerian money. So anyone you actually want to pay, so you can reach out to me on @Tunde Thompson on Telegram. @Tunde Thompson. There is no additional +1 or Tunde Thompson 1 or underscore, just @Tunde Thompson. So this is aside. Now let's look at what we have in the real chart when it comes to an order block. All right, so this is one of the practical examples, and this time around, I'm trying to do a bullish scenario. But I want them to have a market structure shift. I showed a market structure shift here, so I'm expecting something like this before I want to maybe take a trade in this type of market. And one thing I want you to know is that before you say an high is actually valid, you want to see the body of the candle close above it, or before you say there is a continuation of structure, you want to see the body of the candle close above it. So let's wait and see when the body of the candle actually, when they are going to close above it, then we'll now determine, okay, if it's worth our trade or not. So I know most of us, we actually like bullish scenario. So this is where I started with a bullish scenario actually. So as we can see here, let's wait for a real break of structure to the upside. Let me make it faster. I don't want. So we've actually had a break of structure to the upside, and they've actually closed with the body of the candle. So we can say this is what a market structure shift. This is MSS. So what we are waiting for is actually for them to actually retrace into another block. So if you are looking at it, which one is the other block? Everything is just jam packed and all that. Look at this place. This is the last bearish candle. This is the last bearish candle that we have. Like I said, the last bearish candle. And some of you will ask me, why am I not picking this one? You can pick this one, you can pick this one. But when you have two candles overlapping, preferably, you can pick this, you can pick this. But if you have two candles like this, overlapping, like when they are beside one another, you pick the highest one. But since this one actually has a full body, you can still use this. So I am going to be placing my long. Let's say I'm placing my long here. So all the confirmation are actually with us, and my stop loss can be at this low here, at the low of the body, or at the low of the week. Either one I choose to. So my take profits can actually be anywhere. I mean, not anywhere per se, but a reasonable price point. But let's go for this high here. So this is like 1:what? Let's do this 1:3. Yeah, 1:3 is okay. So let's place a trade and let's see the outcome in a bullish scenario. Let's see if they are going to retrace price back into it. So yes, the market actually tapped us in. Let's see the way they are going to react off it. And again, we can actually like continue the market movement. We can continue the market movement from here like this. If you look at this, after this high, we have this low, after this high. This is also an order block. This is also another block. You can maybe put your stop loss at the low here, at the low of the week, or somewhere here, and your take profits can be here. So this is 1:2. Okay, but let's remove this and let's focus on one thing. So you see, it's respected it, and what it gave us a push up again. Okay, and again we can still say, okay, there is still another trade here. Let's even take this one. There is still another trade. This is where I'm saying when there is overlap of series of candles. So in a situation like this where we have 1, 2, 3, you can either go for the high or you go for the middle candle. So if you have like 4, we just go for the one in the middle. Okay. So in a case like this, I'm going for long here. Let's use the one in the middle. Let's go for long in the middle. Okay. And we can actually put our stop at this low, below the wick, or at the body of the candle, so we can still stay our take profit is here. This will 1:2.5. So I'm expecting price to actually retrace back into this place. So let's place our trade. So let's watch price. Okay, price have actually tapped us in. Let's see where next they will go from here, if they will respect the other block or not. So boom, we actually had a full take profit. So if you are trying to use another block, this is the way to use it. And preferably, if you want to use it when there is actually a market structure shift. And you can also use it for a continuation of structure. You know, I actually showed it here. This is a continuation of structure. This is MSS. That is the BOS. Okay, I'm talking about the BOS now. So after BOS, then a retracement. This is another block. I used it. I took the trade off. Then we have another uh we have another BOS here again. That's the break of structure, break of previous structure. So you see, I use this both in the case of market structure shift and BOS. Well, this is not the end. This is just a bullish scenario. Let's go into the bearish scenario so that you are going to understand fully in both cases. All right, so this is actually in a bearish scenario. Firstly, let's assume, or let's say there is actually a tap inside the higher time frame that made the market actually to sell. Let's just imagine, and they sold down aggressively. But if we are to look at it, this actually gave us a break of structure, an MSS. Yeah, sorry. You know, the structure has shifted. You know, we're bullish, and what happened? It became bearish. So we are trying to hunt for our order block, and where are we going to get our order block? We can get it in an higher time frame. You know, let's say the 4-hour time frame. So this is, if you look at this MSS, this is actually still our order block, because the aggressive push up, well, yes, we can say this, we can use this candle, as our order block. This is where market structure shift happened from. We can use this candle because this is the last close candle before the breakdown in the market. So we can say, okay, let's wait for a retracement. Let's go short at this candle here. Let's go short. So I can put my stop loss here, or I can put my stop loss here. So this is for people who can't actually afford to go this far to risk in the market. So we can do, let's do 1:5. Should we do 1:5? Okay, let's do 1:5, and let's see how that is going to work out. So I can now place my entry, and let's see the way the market is going to react to it. All right, sorry, the thing is, let me make it faster. Let's use like 1 hour. So the tab does in, and let's see the way market is going to react from there. So right here, we have MSS, market structure shift. MSS, we have market structure shift. Now I can go back. No, I mean BOS. I'm sorry. BOS, we have a BOS, after MSS, then BOS. Then I can now go ahead and go and hunt for the last close candle. That is, it was a buy up, the last candle. And if you look at this candle, they actually have, this is the last green candle, the last bullish candle before the aggressive breakdown. That is to find a bearish order block. So I can basically say, fine, let me pick this, or I can pick this. depending on how you want to expose yourself to. And some people used to do, they measure the whole candle from this place to this place, and they do the 50%. So if you do the 50%, you should be having something like this. So it's very subjective actually. So I can put my entry here, and I can put my stop at this high or at this high. So it all depends on how you want to expose yourself to the risk, or if you can. But preferably, for you to say you want to do something like this your stop loss is meant to be at an high. But sometimes markets can't travel that far and start selling back. Most of the times they don't travel. They won't like travel this far and maybe try to like reverse. So let's go with this order block and let's place our sell position. So we are risking like 2%. This is an added position to it too. Let's see what the market will do. So we have a tapping, and let's see the way they are going to break away aggressively. Are they breaking away for us? Okay, so we've had like a market breakaway that the market actually so now we can still continue to trade. Yes, we can still continue. We can say this is an order block. We can say this is an order block. Okay, so and one thing I would like you to know is that if you have small body, let me remove this. If you have small body and you have long candle, use the wick of the candle. But if you have just one single candle like this and the wick is longer, then use the wick. But in a situation where you have just one candle and the body is more, use the body. If we use the body, I think we'll still be tapped in. Let me see. Yes, we'll still be tapped in. So use the body of the candle. But if you feel like you don't want to miss trade, if you feel like you don't want to miss trade, use the wick of the candle. So in a situation like this, I'm going to be using the wick because we have more of wick than body. So I can go again for another sell. My stop loss can be here at this high here because I'm not expecting price to come back there. And our take profit, let's put our this take profit to be somewhere here. So let's place order 2%. Let's see if they will actually come back to where we placed that. Okay, yeah, we got tapped in. We got tapped in. So let's see how this plays out. All right, so everything cleared. So you guys can see how the market actually. This is an BOS. Yes, BOS. So you can see how I'm using the order block to my advantage. So don't say that anything has stopped working. No, nothing has actually stopped working. You just need the right coordination. Well, this is Tunde Thompson. And please, if you like this video, do well to drop a thumbs up and follow my account. You are welcome.